to start the class? It is, isn't it? I guess we'll start on time. All right, what I thought we might do is work problem number 1 from the quiz. Did everybody print out the quiz for themselves, or do you have it online one way or the other? And right in front. Okay, so it's easier just to do it on a blank sheet here, especially with this one, because it takes a lot of room. Okay, so if you got it right in front of you, that's great. If you don't have one right in front of you, I bet your neighbor does. Right? Maybe. You're not bring one. Jeez. Okay. Anyway, who does have one right in front of them? A bunch of people. Okay, so see if you can find somebody to look at it, or you can just write down what the numbers are as we go. Okay. Anyway, I would think by now everybody would have a copy of that. It's not like how well you do in this class is my job, it's your job, isn't it? Right? My job is to cover material with you and try to get you working, right? Different. Okay? So, all I can do is make suggestions. Come on. Where'd you go? Did I get off the pen or something somehow? Yes. You got that. I hit the wrong key someplace. Yes. Picked up the wrong thing at the wrong time. Jeez, come on. There it is. Wrong order or something. Okay, anyway. So it says, this was a 6-point problem. But if it's 6 points out of, what was this, 25 points? 6 out of 25, how long is that supposed to take you to get 50 minutes or so to do the 25? 2 minutes each, 12 minutes for this? Sound good? It's about 12 minutes. On a test, faster, right? But it'd probably be more like 12 points. Got the idea? Same on the final, kind of. Okay? I am going to expect you now to do this, or maybe I'll give you more. Okay? On test and final. So anyway, this is the deal, right? We've got periodic, perpetual, lateral, FIFO, and moving average. Okay, so that's what we want to know about. Periodic. If you know what it is, it sure helps being able to calculate them, obviously. I hope that's funny. Not really. And for each of those types, we are going to have, right? FIFO, LIFO, and average. And one average we'll call moving, and one average we'll call weighted. And it'll be obvious why they're called what they are. Okay? All right. What do we mean by periodic inventory? You guys know what inventory is, right? The stuff you buy from somebody else you're going to resell, or maybe you manufacture it yourself and you sell. Right, guys? Okay? It's your product, right? Where it's goods. Your book was somebody's inventory before they sold it to you, right? This table, somebody's inventory before they sold it to the school. Everybody got it? Right? Buy a can of Coca-Cola. It was their inventory before they sold it to you. You got the idea? It's all their products, okay? Not services, okay? All right, you can't inventory services. Okay, so what we've got here then is periodic and perpetual. What do you do with periodic? You periodically, which means once in a while, at least once a year, right? You do what? Count your inventory, right? And by the way, if you're perpetual, you still count it. In periodic, though, you don't keep track of it perpetually. You just count it, and when you count it, you determine what your inventory is, and you determine what your cost of goods sold is. So you just keep track of your purchase. You don't keep track of your cost of goods sold as you go along. Is this easier accounting? Yes. Do you have less information? Yes. Is it cheaper? It used to be much, much cheaper before there were computers. But now with computers, has anybody ever worked in a loading dock or a store where they're bringing in pallets of materials? Anybody? Okay. The pallets are usually shrink wrapped, aren't they? Right? And there's a big piece of paper on the top, or it's just printed in the shrink wrap, right? A barcode, huh? And all you do is you bring it in, and there's a scanner on the ceiling, right? Am I describing this correctly? Okay. The real world, what we do now. And as they bring the pallet in, it scans what was on the pallet. Debit inventory, credit accounts payable. I'm not kidding. Update all their inventory records. They're perpetual. Is that what you're going to say? They're perpetual. Okay. Where were you at when you were doing this?
Cintas.
And what do they do?
It's like a dry cleaning and uniform.
So everything coming in, and I'll bet everything going out gets scanned too. Okay, good. Okay, yeah, lumber supply place, 84 lumber, yeah. Everything coming in gets scanned, updates the inventory automatically. They don't do this stuff by hand. Who in their right mind would? Well, You do it by hand if you don't have computers, right? Used to be nobody had it. So it was all by hand or you didn't keep it perpetual, right? Then when it goes out, what happens? Everything gets scanned. Everything going into Kroger gets scanned in. Everything going out of Kroger gets scanned out. Walmart too. What was the name of the lumber?
84 lumber.
84 lumber. Yeah, 84 lumber. And yours is called?
Centos.
Centos. Okay. Dry cleaning supplies. Yeah. Okay, cool. All right. Everybody does this, unless, you know, what if you're growing corn and you pile it out in the field? Is there a barcode on each ear of corn? There's not a barcode on anything. Okay, so there you're going to have to estimate your inventory. Do it periodically, probably. Got the idea? You might keep track of what's going in and going out. Okay, so what's periodic? I only keep track of my purchases, so we use a purchases account to do that. Debit purchases, right? Okay, which is kind of a quasi-income statement account. Okay, we'll get to that next time a little bit. Okay, so I'm going to debit purchases that comes in, credit accounts payable. Then when I pay it, what am I going to do? When I pay a payable, credit what?
Accounts payable.
What is it with us human beings? Every time you go to a meeting, particularly if there are a whole bunch of people and you don't have to really do anything, we just turn our brains off. Don't we? Come on, you're paying off a payable. Why are credit accounts payable? Because they're going to pay it later. How many people, you think either one of your companies are standing there with a big briefcase full of cash to hand to the people? Of course not. It's all bought on account, right? So it's debit inventory, in their case, it's going to be debit inventory and credit accounts payable. But if you were periodic, what would you do? You would debit purchases and credit accounts payable, okay? And then when you pay it, come on, what do you pay it with? Cash, credit cash, debit what? Accounts payable, of course. Okay, all right. But if I'm perpetual, what do? I perpetually keep track of how much I have. That's what perpetual is, okay? I perpetually keep track of what I have. What am I going to debit? Make sure that my inventory account reflects what I have. Debit what? Inventory. That's what we've been doing so far anyway, isn't it? We were doing perpetual, we just didn't call it that. Debit inventory and credit what? Of course. Accounts payable. Then you pay it. Debit accounts payable, credit cash. I'm going to let you do this again, right? Big deal. It's just more repetition, isn't it? Right? We're just adding a few things to what you already know. That's why I really work with you guys, try to, and getting you to learn as we start, right? Did I tell you at the beginning if you didn't learn the first 4 chapters that you were screwed? I did, didn't I? It's true, isn't it? If you don't know it, you're really in big trouble. If you don't know that when you buy something on account, you credit accounts payable, it's over. If you don't know that when you pay for something, you debit accounts payable and credit cash, it's over, right? I mean, geez, you can't add this new stuff to it because you don't have anything to add it to. Okay? So don't stop, don't stop, don't stop. We're going to keep adding another layer, another layer, another layer. How many of you guys would like to stay in school for 6 years instead of 4? How many of you want to go for that? Give up 2 years' salary, stay here another couple of years, so that you're prepared to go out and work? Or would you rather get it done in 4? How many opt for 4? Everybody, right? I mean, this is fun and all, but you know, let's not get carried away, right? Okay? Plus, it's $100,000 you give up in salaries. And oh, by the way, you pay another $50 in tuition and room and board and stuff, right? So you're giving up $150,000. So would you rather go fast or slow? What do you want? Fast. You do want that, don't you? Really, what we want is to not have to really learn anything and get the degree and then be very successful in our careers. That's what I want too. I don't see any of that, right? The only way that success can happen is if your parents have hundreds of millions of dollars and they give you a bunch. Instant success, right? Short of that, economic success. Short of that, any of you guys have that situation? Probably not. You wouldn't be sitting here, right? You'd be in some school that costs $100,000 a year, right? With me on this? You're going to do it yourself, aren't you? Besides, it's far better to do it yourself. Right? Give you something to do, something to feel good about. Okay? Although if you're born rich, you could work for charities and stuff. It'd be great, right? And you could give away money all your life. Fantastic. Okay, anyway. So you got the idea? What's the deal with periodic? Count periodically. And I'm going to adjust my inventory from where it was last year to where it is now. Or the last time I counted it, right? To where it is now. That's it. Okay, so still though, what I buy, which is my what I start with, which is my beginning inventory. Everybody agree with this one? My beginning inventory, plus what I buy, which I'm always going to call purchases. Whether I'm using periodic or perpetual doesn't make any difference, right? Still purchases. Okay? Difference is in periodic, I have a purchase account. In perpetual, I'll have to figure out how much I bought, right? Because in perpetual, what am I going to debit when I buy it? Inventory, right? When it's delivered to me, right? And credit accounts payable, right? Sure, okay. And then obviously it's debit accounts payable, credit cash either way, right? So I'm going to have, for periodic, I'm going to have my beginning inventory, I'm going to add my purchases. That's going to be called available for sale. Sound good? Would you guys agree that what I start with plus what I buy is what I have available? I mean, come on, right? This is not clever, okay? And then we take away ending inventory. What I start with plus what I buy is what I have. If I subtract what's left at the end, it's what I don't have, which I will call what? Cost of goods sold. Got it. It's the major expense in most companies of getting, the biggest expense in most companies, if they're selling product, right, of getting their revenues. Would you guys agree with that? What do you bet the bookstore had to buy that book they sold? What do you bet they gave the textbook manufacturer most of the money, most of your price to you is buying that book for them, right? That's their biggest cost. Sure it is, okay? Right? It's one of the things that's really inefficient about that. Far better to have it online because their cost is almost nothing for another unit. Get into that stuff later, right? It's just getting the book in the first place. So they should be able to sell it to you for, instead of $300 for that book or whatever it is, should be able to sell it to you for about $50. And they're not, and I think that's a horrendous mistake. It's going to make them cease to exist. Other people are going to replace them because they're going to be much cheaper and just as good. It's already happening. There are people producing books that don't put them in print. They're not competing with them. They're all out online. I'd love to adopt some of those. They don't have the material together yet, right? Once they have as good a book, I'm in, right? I bet it happens within the next couple of years, before I retire. I won't be buying paper anymore. What for? We're killing trees for no reason, right? It's stupid. And it's wasting your money, isn't it? Right? Yeah. Spend it on something else. Okay. Anyway. All right. This is cost of goods sold scheduling. Now, what if we're perpetual though? Oh, with perpetual we have beginning inventory. We'd add our purchases, we get our available, we subtract the ending inventory, and we'd have cost of goods sold. It's the same thing. Except what's the journal entry difference? What's the journal entry difference, do you think?
The available inventory at first and the accounts payable.
Okay, so here we go. Here's periodic. And here's perpetual. And what I would do, okay, is here when I buy inventory, I debit what under periodic? Account named purchases. And I credit accounts payable or cash, right? Cash, I guess it'd be cash. Okay, got it? So I get this purchase account here. Real big. Under perpetual when I buy it. Just using a different system. Merchandise inventory. And credit what? Accounts payable, and when I pay it, I debit accounts payable, credit cash. Everybody knows that, okay? So I don't have my purchases separate, but can I figure out what they are? Of course I can, right? Went into the inventory account. All right, now what? How about when I sell it? What am I going to do on the sales side when I sell it? Probably debit what?
Cash.
Either cash, if I'm a retail store, cash,
Or accounts receivable.
or accounts receivable. If I'm doing business to business, it's going to be accounts receivable, isn't it? So either cash or accounts receivable is the debit. What's the credit? Sales revenue. For both cases, right? Perpetual or periodic can be the same. You're selling stuff. So what's the big difference going to be here? The cost of goods sold part. So either way, I'm going to debit either accounts receivable or cash, right? Credit sales. Here, I'm going to debit accounts receivable. Credit sales. You guys already know how to do this, don't you? No big deal. Okay, but then when I sell it, what happens under periodic? No entry for the cost of goods sold. I'm going to wait until the end of the year, or the end of whatever period when I count the inventory, right? I'm going to go beginning inventory plus my purchases account here, get available, subtract the ending inventory. Oh, I have to count it first and adjust to the ending, don't I? Right? Make an adjusting journal entry for that, to adjust from where it was at the beginning to the end. That's it. And then I'm going to subtract that ending and I'll have cost of goods sold. Boom. Okay? On perpetual, what do? I debit merchandise inventory when I buy it, right? When I sell it, what do? I credit it because I don't have it anymore. Would that be a clever thing to do or what? If you're going to perpetually keep track of it, in perpetuity, right? Perpetually, constantly, okay? And I would debit what? Not cash. They didn't give me cash, not sales. I'm debiting accounts receivable and crediting sales. Oh, cost of goods sold, that's it. Debit cost of goods sold and credit merchandise inventory. So I know my cost of goods sold, it's going to all be in that account. So what I'll do is I'll take my beginning inventory, I'll compute what my purchases are because that's everything that got debited to cost of goods sold, or I'm sorry, that's everything that got debited to merchandise inventory, right? So all the debits to merchandise inventory added up, big deal, okay? So I'd add that and I have available, don't I? Then I subtract my ending inventory, and oh, by the way, I still counted it. Of course I still count it. I mentioned last time, does anybody, have you ever seen, maybe it was the other class, has anybody ever seen somebody walk into a store, convenience store, grab a six-pack of beer and run out the door, stealing it? Have you ever seen that? Probably, right? Okay, have you ever seen any of those people stop at the checkout stand and say, I'm stealing this, and I think it's really important for you to update your inventory records. Reduce your inventory records, buy, and then run. Now, they never say a word, do they? Have you ever seen anybody, you guys worked with product, okay? Have you ever seen anybody drive a forklift over something and report it to the boss? Or do they just throw it in the dumpster? Unfortunately, they usually throw it in the dumpster. But if you have a really well-run place and the boss really knows what they're doing, they always report it. You don't get fired for destroying product. A mistake happens once in a while. Now, if you do it every day, yeah, right? But if it's occasionally big deal, stuff happens. But what happens a lot of times? People hide their mistakes, don't they, unfortunately, right? So what happens with inventory? Perpetual inventory is wrong. Have you ever gone to a store, right? You go in and you're going to buy something, right? And they check in the computer whether or not they have it. Then you go out to the shelf and they don't have it. Happens all the time, huh? Auto parts stores, notorious, right? Okay, clothing stores, notorious, right? They don't really know what they have because they didn't record when they shipped it from one place to another properly. They didn't record what came in properly. They didn't record what went out properly. So then they'll tell you, oh, well, we don't have it here, but we have it in another store across town. So you immediately run over to that other store without picking up the phone and calling them and asking if they really have it, right? Of course you don't. You pick up the phone to find out if they really have it. Because why drive over there? Because what's going to happen to you? Happened to my wife yesterday with a phone. She's trying to get new phones. What for? We won't go there. Okay, anyway, so we have perfectly good phones. But these have more memory, right? Probably a little bigger. Yeah.
She's not like taking pictures of your grandkids.
And there'll be bigger pictures now. Yeah, okay, good. Okay, anyway, so even though you can put them on the screen. Anyway, so, which we do at home, by the way, big television screen. Well, not very big, but by today's standards. Okay, anyway. She went into a Sprint store, I guess it was. On the other side of town, she's over to the grandkids, right? And they says, oh, well, we have this deal, but we're out of the phones. So she went to the Sprint store here on Bardstown, and guess what? They're not out of phones, but they don't have that deal. Right? You got to call first, right, guys? You guys know that, okay? I laugh at it. This is why you call, right? So they can tell you no, okay? Anyway, so the deal is you have to count anyway, right, guys? You got to count anyway. So either way you count. So don't tell me on perpetual you never count. That's ridiculous. You still count. Okay, anyway. So you got the idea that the cost of goods sold schedule looks the same either way? The only difference is with perpetual, because you put the inventory in, take the inventory out, you have an idea what the inventory should be. So then when you count it, do you know how much is stolen or lost? Yes. Right? You know how much you lost. How about with periodic? You never know. Anything that's gone is cost of goods sold. Which do you think is better internal control, better control of the business?
Perpetual.
Perpetual. Which tends to be more expensive?
Perpetual.
Perpetual. But what if you're computerized anyway?
Perpetual.
Perpetual is better all the way around. Got it? Okay, so more and more companies do perpetual. Smaller companies don't. If you start your own bakery, I bet you don't put a barcode on every single product, right? But you know what? If you're Kroger, everything's got a barcode on it. Even the stuff they theoretically bake in the store, right? They put barcodes on it, don't they? Right? Yeah, they do. So, yeah, hopefully they're making it in the store if they say they are. All right, anyway, okay. So then, that's perpetual versus periodic, and within each, We can have FIFO, LIFO, and average. Let's talk about what this means. What's FIFO? What do the words mean? First in, first out. Okay, now here's where what things people up. They think what they have in inventory is what? The first things they bought. No. First in, first out. What does out mean? Those are the ones you sold. You sold the old stuff first, and what did you keep? The newer stuff. So it's the most recent purchases. That's it. Don't let that turn your brain around, okay? What's LIFO? Last in, first out. What does that mean? The last
things that you buy.
The last thing you bought is the first thing you sold, and you kept the old stuff. You guys know any businesses that do this? I had somebody in one class a couple of years ago say antique dealers. They might try to do that, the old stuff is more valuable, selling the new first, but not. In general, imagine a dairy. They've been in business 100 years. They have quarts of milk that are 100 years old, right? Because they only sell the fresh milk first and they keep the old. No, they don't. How about bread? How about automobiles? You got one?
A4 lumber, it's first in, first out, mostly because wood will eventually just rot and it'll start to warp and everything.
Oh, there you go, it'll rot. Yeah, the inventory will go away, won't it? The wood will rot, it'll warp, right? It'll just look aged. People don't like it anymore. They don't think it's as valuable. It just looks aged, right? They'd rather it aged in their wall instead of aged in the lumberyard, right? But yeah, inventories deteriorate, don't they? Right? Get damaged, okay? So we want it turning. So everybody does FIFO. So if we really move the goods FIFO, why do we have LIFO? Listen to this one carefully. Those of you who take the CPA exam someday, don't give this reason even though it's the truth. This is silly. Congress, in their infinite wisdom, a lot of years ago, decided there should be something called LIFO. I mean, U.S. Congress. It's a tax break for people. What happens is you put into your tax return for cost of goods sold higher prices if there's inflation, because the more recent stuff you bought costs more, typically, right? If there's inflation. There's deflation, the reverse would be true, right? It's kind of catches in using LIFO. And so what happens is you save tax dollars because you have more cost of goods sold with LIFO, less cost of goods sold with FIFO, right? So everybody adopts LIFO, almost everybody, right? And I recommend it to my clients to adopt it too, because it saves you a lot of tax dollars. You have to pay the taxes someday, but not until you deplete your inventory. Does that make sense? When you get rid of your inventory, then you'd be selling that cheap stuff that is 100 years old or whatever, however long you supposedly held it, right? So you pretend that you're doing LIFO, right? Now here's the deal: the tax code that they wrote, this is nuts. It doesn't suggest. It requires that if you're going to use LIFO for tax return, you must use it for financial statements, for your books, for your financial statements, right? So we pretend that we're using LIFO, kind of, right? Now, one thing about it that is true, you'll learn in intermediate accounting to write on the CPA exam, right? One of the things that is true is the income statement has more recent costs on it, right? Because you're using LIFO, right? Because they're more recent ones. But what happens to your balance sheet year after year after year? It's further and further and further off, right? Because you got older and older and older ones sitting on your balance sheet. Unless you're turning your inventory. What do we mean by turn? You read about that. Sell it off and sell it off and sell it off and sell it off. And then it doesn't make much difference which one you use, right? If you're constantly turning it, you're turning it fast, which of course is something you want to do. But in some industries, it's hard to do that. That make sense? We'll talk about a bunch of those things as we go along too, in this class and other classes. Okay? So LIFO is really for tax purposes. Now, it saves companies a lot of money, and it's permanent savings if you do not deplete your inventories. This is billions and billions and billions of dollars in uncollected taxes, which are quite legal. The law was written on purpose. So when you talk about tax loopholes, a lot of tax loopholes were written on purpose. Lots of companies that have inventories, right, get a big tax benefit out of this. Service industries are angry about this. They don't like this one because they don't get any tax benefit. Only people selling merchandise. But Congress wanted to encourage people to sell merchandise, I guess, right? And give them a tax break, okay? So it's intentional. It's intentionally there. The rest of the world does not allow LIFO for financial statement purposes because they don't have LIFO for tax purposes. So International Financial Reporting Standards, right, that we're trying to merge with in the U.S., trying to get ours to match theirs. By the way, there's one major economy in the world that does not use International Financial Reporting Standards. Over 100 countries use them. Guess which country does not? Us. Because we want to do it our way. By the way, why do you suppose we don't get rid of LIFO? Well, the argument is that would cause companies to pay a bunch of taxes, disrupt the economy. But you know what? We could just get rid of the requirement that you do it for financial statement purposes, and that goes away. We could have something called deferred income tax that we'll learn about later. Okay? We could have deferred income tax, just paying it later, and we just record the tax expense and record the liability, it'd be fine. But we don't want to do that. Do you think the U.S. Congress, particularly the way it's constituted now, wants the French telling us what to do? We always think international means French in this country, right? But it's Europe and now the rest of the world, started in Europe, in the international reporting standards. The good news is those standards and ours used to be really different, and we've been working on this project, the profession has over the years, been working on this project to converge them, and there are very few differences left. This is a big one, right? We have to either change our tax code or change our laws or do something, right, to get rid of this thing before we can really merge. And the rest of the world's not going to do it. It's kind of illogical, isn't it? How many people really keep the old stuff and sell the new? No one. But again, I recommend to all my clients that they use LIFO. Why? Time value of money that we're going to do real soon. How if we borrow $1 million now and pay it back? I don't want to take it. Interest free from the federal government. Would you not take that deal? Who in their right mind would not take that deal? Here's the danger, though. I think you all should use LIFO with your businesses, and you should recommend it to the companies you're working for, your business. Right? Okay? I think you should use LIFO, but don't spend the money that you save. Because what happens if there's a downturn and your product is no longer very popular, and you have to liquidate it all, which means sell it all. You have a huge tax bill if you've been using LIFO. So you're losing money, and you get to pay a whole bunch of taxes. What do you think of that idea? Ugly, huh? I've seen that happen to people, and they're going into bankruptcy, and it makes sure they go in, right? Make sure they're done. So those of you who are going to go out there and work in public accounting, remember that LIFO is dangerous. You should do it, but you should make sure you have the funds, of course, to pay the taxes, should that ever happen. And us, all of us are really optimistic, right? As long as the company's making profits, do we think that's going to be forever? Yeah, our product's popular, we're making a profit, everything's going to be great, life is going to be wonderful. You know, if you have a really good job and you really like it, do you ever think they're going to lay you off? Yeah, Volkswagen, yeah. Well, Volkswagen shareholders anyway, yeah. I guess the management thought that they could get away with cheating forever, right? By the way, is this the first time that auto manufacturers have cheated? No, 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 no. They've done exactly this thing before. A number of trucking companies were doing the same thing. Companies that make trucks, right, were doing exactly the same thing a few years ago. And got caught and paid a big fine. Here we go. Yeah. Let's try to drive our company into bankruptcy. It's crazy. All right. So, and then what's average, I suppose? It's somewhere in between, right? And the reason that's created is, actually, by the way, what we do in the financial statements is we say we're either using FIFO or LIFO, right? And that average is a moving or weighted average is a approximation of one or the other, even though it's not really, it's kind of in between. Okay, but people are still using all three of these, so we'll look at it, okay? By the way, LIFO was extremely expensive to use from an accounting standpoint. Say the tax dollars was expensive from an accounting standpoint before there were computers. Now it's easy, because you have to keep track of the LIFO layers, but a computer doesn't care how many layers there are. Okay? Everybody got the idea of what these three things are then? Okay? We're doing okay, sort of. Okay, between the 2 days we'll get this done. All right, so let's go. Let's try this problem, okay? If I wanted, and these are so easy when you do the periodic. I mean, really, really easy. Don't miss these. This is just nothing. With periodic FIFO, what would I still have in inventory?
The last one.
The last ones I bought. All you have to do is go to the last few purchases and value your inventory at that amount, okay? What is LIFO going to be?
The last ones are now gone, so the first ones are still in.
The first ones are still in, which means what? The beginning inventory, don't forget the beginning inventory. The beginning inventory and maybe the first purchase, maybe the second. Now, I only give you, what, two purchases and 2 sales. Maybe I'll give you 3 on quiz or a test, right? How many are there really? How many purchases are there really in a year in a company? Oh man, thousands, right? Okay, even in a small company, hundreds maybe, okay? How many, at least 10 or 12, right? Once a month, 12, okay? How many sales are there? Far more than that, right? Every time your customer buys something, okay? So everybody got the idea this is just for demonstration purposes. In real life, you just do it over and over and over, though. It's no big deal, okay? All right, so let's try this. What I would suggest you do is you keep track of the inventory in units. You can do this any way you want, like everything else. Get the right answer, done good. And we'll keep track of the inventory in dollars, okay? Remembering the whole time what we want to do is we want to do cost of goods sold schedule when we're done with this. We want to take the beginning inventory, we want to add the purchases to it, right? And then that's going to give us available. And then we want to subtract the ending inventory. And what that's going to give us is cost of goods sold. Does everybody agree with that? And you don't have to write down both of these. This is just so you see it. And then you can use whatever portion you want, right, to work it. All right? Let's do units. It's going to be the same units we have over here, right? And dollars. It's going to be the same dollars we have here. Okay, so where do we start, everybody? On January 1st, what do we have in the beginning of the year?
$16, 16 units worth $9 in.
16 units, they're at $9. So 16 times $9 is what we got, isn't it? Okay, how much is that? 144. Thank you. $144 is my beginning inventory. I start with 16 units. They cost me $144. Is that right? Yes. That's going to be the same whether I'm doing no matter which method I'm using, LIFO, FIFO, periodic, perpetual, doesn't matter. The averages. In real life, they'll be different, right? The beginning inventories would be different. The quantity wouldn't, right? The quantity is whatever's there. Oh, by the way, let's never lose contact with reality. The number of units we have is the number of units we have. The number of units we buy is the number of units we buy. The number of units we sell is the number of units we sell. The ending inventory is whatever the number of units we got, right? It's just we're assigning different dollars to these different methods. Everybody got it? These different accounting methods are going to assign different dollars to those things. That's all it is. Everybody good? But here's the deal. If your ending inventory is different under the different methods, what's going to happen to the next year's beginning inventory, seeing as it's the same number? That'll be different too, right? LIFO will be different than FIFO. Make sense? So for our little example here, I'm making the same, okay? Just so you don't have too many things to move at once, right? This can get to be a real mess, trying to keep track of it. All right, we won't get too carried away here. I know you think it's carried away at first, but it's not. 16 times 9 is 144 bucks. Okay, now, for perpetual, you have to keep track of the order everything happened. If I buy something, right, it's now available to sell, right? Okay? If I sell before I buy it, guess what? That's not available to sell. So under perpetual, you can't sell something unless you have it. Does that make sense? Under periodic, you pretend that you buy everything before you sell everything. Because you don't know when you bought what, right? You don't keep track of it that way. Does that make sense, guys? Okay? So under periodic, you pretend you buy everything, and then you sell something. Okay? Under perpetual, you have to keep track of each layer, right, of what you bought and what you sold. So it makes perpetual harder. So periodic is going to be easy. But for now, let's just keep track of the sequence here. So what's the first thing that happened?
You sold 12 units.
Yeah, could I have bought some instead? Sure. Okay, so sale 1 is 12 units going out. And my job is to determine how much those cost. Right? That's what I'm doing. Okay? I want to get how much those cost, but I want to go up and get what all of them cost. Right now, I do not know what sale 1 cost. Okay? Different methods are going to give me different numbers. You got the idea? Okay, then what's the next thing that happens?
Purchased 18 units.
Okay, so I'm just putting them in order. I'm calling them sale 1 and purchase 1, but you can put the dates on them, of course. Okay, how many did I buy? 18 units. And how much did I pay for them?
$10.
$10. It's 180, isn't it? I hear that out there too. So I do know what the purchases are, of course. I just don't know what the sales dollars are yet, right? The cost of goods sold dollars are. This is going to be cost of goods sold for sale 1. Sales would be whatever the sales price is times the quantity, right? If I have you do that, big deal, huh? Right? Okay. Then what's the next thing that happens?
So 19 units.
Okay, so if I sell 19, whoops. Oh. So 2 is 19 units. If I sell 19, what'd they cost me? I don't know yet. I'm going to compute that. That's what we're doing, right, guys? Okay? So then what happens?
About 17 units at $11.
How much is that?
Maybe 7.
Purchase, excuse me. 187. All right, excellent. Okay, so the first thing we could do is we could add up how many units we purchased. What is it, 18 plus 17? How many is that?
35.
How many are available, everybody? I guess 16 plus 35, huh? What is it?
51.
51. And imagine millions of them, right? Thousands, whatever. Okay, yes.
For that, oh, never mind. I was gonna ask why available wouldn't be 20, because you don't take into consideration the units that you sell.
That's gonna be ending.
Okay.
Yeah, right, ending's gonna be, yeah, okay. How much do those cost, by the way? Just add those two together, right? There's the purchases. And of course, there'd be hundreds of them, right? Thousands. Okay, what's 180 plus 187?
67.
So do I know how many dollars I have available? Of course I do, right? It's going to be the same no matter which counting method I use. Okay, how much is that? Okay, so what I'm going to do is I'm going to figure out how much of that 511 goes on ending inventory and how much goes on cost of goods sold. That's what we're doing with these different methods. It's that simple. If you don't realize that, this is magic, huh? Okay, oh wow, how can I remember all that? Well, that's all we're trying to do. Okay? All right, so how many units do I have left in ending inventory? If I started with 16, I bought 35, there's 51. How many did I sell, you guys? 12 plus 19, how many is that?
31.
31. So the ones sold are 31. How many are left, obviously? If you have 16 plus 18 plus 17 is 51, less 12, less 19, how many do you have left? 20. Of course, your ending inventory is 20. So I want to know how many dollars go with the 20 ending inventory, right? And how many dollars, that's be here, and how many dollars go with this cost of goods sold? That's what I'm doing. Okay? That's it. Everybody see it? Not a big deal, is it? Okay, now it's going to be really, really easy for FIFO, LIFO, and weighted average periodic. So let's do those first.
I'm confused by gap 20, because if you start off with 16 units, you use 12, you have 4 left over, 4, 18.
So is it 22?
Yeah, because you have 16, sold 12, which gave you 4. Then you added, then you bought 18.
Then we've got how many we bought from. 16 plus 35 is 51, less 31
18 plus 17.
is 20. 16 less 12 is 4, plus 18 is 22, left 19 is 3, plus 17 is 20. All right, you guys. Do it again. That's scary. Get your calculator. No, don't get a calculator. Everybody see it? It's 20, isn't it? Am I reading them wrong?
It's 20.
Okay, all right. Way to go, you guys. That's fun. All right. So, okay, you guys are sure too. Okay, at least you're confident. I like that. That's good. That's better than saying nothing. Absolutely. Okay, here we go. All right, guys, let's value them. Periodic. How many units do we have in ending inventory?
17.
What? Ending inventory.
Oh, you,
20 units. Okay, which ones? First in, first out. Which ones do I keep?
you want to keep the last.
Last ones. Okay, so what was the most recent purchase? 17 units times $11 is how much? I already know what it is. It's 187. It's a nice thing about using that approach, huh? Okay? And then how many more do I need to make 20? I think it's 3. Which ones? Some of these at 10, right?
I thought we were doing first and first out.
First in, first out. Which ones do you still have?
We had the first ones in with 16 units.
Okay, we sold these 16, and then we sold 15 of those, and we kept 3 of them. Right? We sold the beginning inventory. We sold most of purchased ones. We only have 3 of those left, so 3 of those, and then we have 17 in my most recent purchase. Don't let it flip on you. It's the most common mistake on this is doing backwards, isn't it? You see why, right? Okay. Which ones do I still have? The last ones I bought, right? First in, first out. I kept the last ones. Cost of goods sold is the first ones. So what's 3 times what? $10 for those?
30.
So what's my ending inventory? 187 plus 30 is how much? 217. What that is? Yeah. 217. Okay. That's my ending inventory. Now what's going to be cost of goods sold? This is unbelievably easy. What do I do for cost of goods sold?
Sell your available from the.
Take your available, it's 1511, less your ending inventory is 217. What do you get?
294.
294. It's just whatever it was, right? Whatever you don't have is cost of goods sold. Everybody got it? This is too easy to believe, isn't it? Okay? So let's switch. Oh, by the way, I got one other piece of good news for you. There are 6 different methods, right? Periodic FIFO, periodic LIFO, periodic
Average.
weighted average. There's perpetual FIFO, perpetual LIFO, perpetual moving average. It moves every time you buy something. That's why it's called moving, right? And the periodic weighted, because you pretend you bought everything before you sold everything, anything, right? Okay, so that's why they're called that. But here's the good news. FIFO is the same both ways. So FIFO is really easy to calculate for perpetual. Do it this way. So if I ask for both, which I probably will, what do?
Just copy.
Calculate it once for periodic and write down the same answer twice. Not kidding. Okay? It's the same because you're always doing what? With perpetual. With FIFO, first in, first off, you're always selling what? The old stuff and keeping the new. It doesn't matter if you're perpetual or periodic. Works out the same. Right? Works out exactly the same. You're always selling that stuff. Right? With LIFO, they'll be different. Although usually, okay, you don't have to be, but they'll usually be different. Depends on the timing of when you buy them and you sell them, how much. Okay, guys? All right, so let's try perpetual. What's it going to look like? I'm sorry. Let's try periodic. Backwards. Try periodic. This was FIFO. Let's do LIFO. What do you think it's going to look like, guys? How many do we have in ending inventory? 20 units. Absolutely. Which ones? What was the beginning inventory? We're going to have the beginning one still, right? Because I didn't sell any of them. Because I pretend I buy everything before I sold anything, right? So I've got 51 of them to sell, right? I started with 16, I bought 35, I have 51 to sell. And I'm going to sell the most recent purchases, even if I haven't bought them yet, right before my last sale. Notice this purchase 2 here came after sale 2? That doesn't matter. I don't know when they happened anyway. I don't keep track of it, right? So I do what? Which ones did I sell? I sold the last 17 I bought. And then I sold what? 3 from the one before that, right? Or 18 from the one before that. All but 4 of those I must have sold. How do I know that? You don't do it that way, but how do I know that?
So you're going to get 20 inventory.
I still have my beginning inventory. I need 20. From my beginning inventory, how many do I have?
16.
16 units. At what? What did they cost?
$9.
How much was that? We already calculated it, didn't we? 144. Good. How many more do I need to make 20? 4 units. Where do they come from? The first purchase. And obviously, in a real company, it might be the beginning inventory, the first purchase, the second purchase, the third, right? Got the idea? Okay? And on FIFO, it might be the ending inventory and the last purchase and the one before that and the one before that. Whatever you have to do to get enough inventory, right? Okay, so 4 units at how much? Those were 10, weren't they? How much is that? 40 bucks. Okay? So what's my total ending inventory?
24.
What's my cost of goods sold? Well, what I would do is I would change then. I'm going to use that method and make that smaller so it doesn't erase everything. Okay, so what we would do is we'd say, okay, those 20 ending inventory only cost how much? 184, or it did cost 184, it's less than the 217, right? That's because I have inflation, huh? Costs are going up, aren't they? So notice that FIFO gave me a higher inventory, right, than LIFO. What's that going to do to cost of goods sold, of course? I have 294 cost of goods sold under FIFO. What am I going to have under LIFO? What's 511 less 184?
327.
327. So it gives me more cost of goods sold, doesn't it? If let's say I'm in a 40% tax bracket and these are millions of dollars, what's the difference in my cost of goods sold? 327 less 294 is how much? 33 million dollars. Take it times 40%. What's 33 million times 40%? 33 times 0.4, what do you get?
13,200,000.
13,200,000 long-term borrowing for the federal government, interest-free. I like it. Nice tax break, isn't it? That encourages manufacturers and merchandisers, I guess, right? Okay, anyway. If they had never put it in, they'd be able to get rid of it. By the way, do you think the White House wants to get rid of that? Yeah, they'd like all the money. Do you think Congress wants to get rid of it? No, they want to get reelected. Well, this would be a way they could change the tax law and say they didn't raise taxes because the tax rates would stay the same and corporations would pay an awful lot more tax. That'd be good, wouldn't it, for politicians? We didn't raise your taxes. I know you're paying twice as much, but oh well. We didn't really raise them. It's the same rate. They do that a lot to us. The tolls on the bridges are not taxes, right, guys? Those are fees. Those aren't taxes. Right? No new taxes. True. I guess not. Fees. Okay. Let's do weighted average. Also periodic. Okay? What do we do here? How much do we buy? 35. How many do we have to start with? 16. How many do we have? 51. What do we spend for the ones we bought? 367. What do we spend for the ones we had at the beginning? 144. How many do we have? 51. How much do they cost? 511. Can you tell me the weighted average of those?
Yeah.
That's it. What do you do? 511 available in dollars. 51 units available, right? Yeah. So 51 units divided into 511 is your weighted average cost. What is it per unit? 10 what? 01. So leave it in your calculator, right? 1001 was the average. Okay? So if it's 1001, is, by the way, that's not the average of 9 plus 10 plus 11 divided by 3, is it? That'd be exactly 10. Right? So it's some other number. So you get the weighted average. It's different, right? Given the quantity you have of each. I made my quantities too close together on those, didn't I? But if they were real different, it'd be a different number by a lot. So what you do is you take your 1001 times what for your ending inventory? How many units are in ending inventory? 20 units, still same company, and how much is that? $200.20. So my ending inventory now is $200.20. No kidding. What's my cost of goods sold going to be? What you could do for cost of goods sold, you could take the one sold. What's 35 units sold times 1001? What do you get?
$350.35.
It's what?
$350.35.
It's got a total to 511.
35 times 10.
Well, that's purchased. I'm sorry, I wanted 31 cost of goods sold. My apologies. Yeah, it's 31 we sold. I apologize. Okay, so the ones we sold are 31. Okay, the ones we still have left are 20. Okay, so 20 or $200.20. What are the 31 going to be? $300 or $310. And how much? 80. About. Okay? Those two have to add up to what, of course? 511 up here. So what we could do, we can change these. Here we go. What do we have for ending inventory, everybody? $200 and 20 cents. Got the idea? And therefore, what's our cost of goods sold? 310.80. So you do it that way too, of course. It's the same thing. Everybody good? All right. For perpetual FIFO, what numbers are you going to use? Same ones. Okay, so this is periodic and perpetual. Nice, huh? All right. Okay. And next time, you better remind me that we have not done perpetual LIFO or moving average because we want to. Okay? That's the one standing me up, really. Everybody good? Easy, huh? Actually, if you read this chapter and you read it carefully and slowly, you probably got a lot out of what I did today. If you haven't read it yet, you probably got nothing. Well, I don't know, maybe it's better than sleeping in. I don't know, sleeping in can help. So, maybe not. See you guys. Have a